Silver, we are told, is used in military, but they conveniently stopped talking about that and stripped it out of the supply-demand fundamentals. The military-industrial complex is pretty damn powerful, maybe more powerful than the present, probably so, probably pulling the strings, the people up there. Do you think they want silver to build all of the missiles that they are selling all around the world and or to the U.S. or to the rest of the world? Do you think they need it? And if silver were really known to be so integral to military applications, do you think it would be as cheap as it is? Do you think there's any coincidence that India has bought, literally going on, if you add what they bought from United Arab Emirates and what they bought from the West, from what they told us, you're getting close to 1 billion ounces of silver in the last 3 or 4 years. China is the largest producer of silver. You don't ever hear them talking about it, but they are, number 2. Mexico's number 1, China number 2.
In today's market news, silver price forecast, silver continues to look miserable. The silver market has been beaten quite drastically overnight again as the sell first, ask questions later panic continues. This isn't just silver that is suffering at the hands of this panic. It's everything. Silver being naturally volatile is yet another reason to be worried about jumping into this market anytime soon with a huge position. Silver had another brutal overnight session, plunging down to the $27.50 level before finding any support whatsoever. Ultimately, this is a market that I think needs a lot of help. And the hotter than anticipated GDP numbers coming out of the United States could potentially give it a little bit of a boost from an industrial usage standpoint. But quite frankly, it seems like everybody's more worried about panicking now than they are anything else. Remember, when assets get sold off in mass like they are right now, silver gets absolutely killed, as it is a volatile market and a huge contract, and people will sell first and ask questions later as computers also add to the noise. A lot of traders have made quite a bit of money in the silver market, so it's not a huge surprise to see that the bottom has fallen out. The question now is whether or not we can bounce, and I think you're going to have to look over at the gold market for signs of that happening. There are signs that we're at least trying to slow down the bleeding, so given enough time, I think we may turn around. But right now, I would not be touching the silver market. It looks extraordinarily toxic, and it wouldn't surprise me at all to see silver race towards the 200-day EMA before it's all said and done. Make sure you hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Also, check our description for full credit details if you want to watch the whole interviews. Enjoy the episode.
The London Metals Exchange, the Chinese own, and those are the base metals. The LBMA would be the silver and gold and whatnot. And they tell us it's the second lowest amount of silver they've had in their inventory since they started keeping records. It's a 140-year-old institution. We've seen massive drawdowns out of the COMEX, off the ETFs, and even out of the Shanghai Metals Exchange. It's very interesting that when you look at the price, currently there are 8 banks, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market. Why? Why would 8 banks be stepping on the price of silver that much? Or the LBMA, who tells us they trade 290 million ounces of silver per day, but say that those numbers are 10% understated, 10 times understated from what is actually traded, just the settlement numbers. But the trading is 10 times greater. That would say 2.9 billion ounces of silver is traded in London per day. That's 3.5 times annual global mine supply. Now, the LBMA says they're very low on silver. They have 800 million ounces, period, of which over 500 million belong to the ETFs, leaving 300 million ounces there, yet they're trading close to 3 billion ounces per day. So between the 8 banks on COMEX, which control the largest concentrated short position in any commodity ever traded, or the LBMA, which is trading up to 3.5 times annual global mine supply every day, should tell you that the real price for silver is, well, heck, no one knows what it is. And when you see central banks like India, who in the last 2.5, 3 years has bought over 700 million ounces of silver, and already here in 2024 bought more silver than they did all of 2023 in the first 4 months of the year, and now bought a whole bunch of silver recently, billions of dollars worth from the United Arab Emirates, because they have some deal in trade with them where they don't have to pay as big of an import duty. Silver is something that is a strategic asset, not an industrial, as all of us want or are told should be. But as far as I'm concerned, it is the drawdown and the accumulation by the biggest money in the world. I want to read something to you because when we talk about the supply-demand fundamentals, the Silver Institute publishes numbers. And those numbers have showed a 250 million ounce or so shortfall in between supply and demand over the last few years each year. And so, in other words, there's more demanded than is coming to market. And when you look at the supply demand numbers out of the Silver Institute, what they say is the demand is industrial, electric and electronics, of which photovoltaics, that's solar panels, other industrial, photography, jewelry, silverware, and that's it. Now, I want to read you something, and I owe this to John Little of the Pickaxe. He's a hell of a researcher. He wrote a report a while ago in which he lists something and shows, people can Google this. It was a hearing on October 14th, 1942, and it was a subcommittee of the Committee on Banking and Currency of the United States Senate. And it is S.2768, a bill to authorize the use of silver for war purposes of silver held or owned by the United States. S, as in Saturday, .2768. Read it for yourself. But I just want to read you the first two paragraphs, all right? And I want you to think about what is missing from the supply-demand fundamentals that we are told by the Silver Institute, showing us a 250 million ounce shortfall, right? Okay. This is dated October 14th, 1942, and you can find it when you Google it. I did. The present consumption of silver for war purposes is at the rate of about 100 million ounces per year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. Now, he talks, John Little does, about the massive amount of silver used in all this high-tech weaponry. I have a client who is a consultant for the Department of Defense, and 2 years ago in Vancouver at VRIC, I made a statement that there's 500 ounces in the tip of a Tomahawk cruise missile. And he came up to me and he said, I work for the DOD. I helped design the Patriot and the Tomahawk. I know there's silver in it. Don't know how much. I'll get back to you. Never heard from him again. I see him this last year in January, and he says, I'll be damned. You're right. There is between 13 and 14 kilograms of silver in the tip of a Tomahawk. And he says, he shows me all sorts of pictures that he said were just that had been declassified and all sorts of stuff. But my point to you is this. In 1942, we were on the verge of using 200 million ounces of silver per year, and for military applications. And now we're supposed to believe that with all the high-tech weaponry, that there's no silver in it. The Silver Institute omits completely and totally military demand. So we have a situation where, ask yourself, why would 8 Western commercial banks suppress the price the way that they do? The largest suppression, the largest concentrated short position in any commodity traded is in silver. The largest.
Silver price climbs closer to weekly top. Upside potential seems limited. Silver gains some positive traction for the second successive day on Wednesday. The technical setup warrants some caution before positioning for further gains. A break below the 100-day SMA support will be seen as a fresh trigger for bears. Silver ticks higher during the Asian session on Wednesday and looks to build on the previous day's modest bounce from the $28.70 region, or a nearly 1 month low. The white metal, however, remains below the weekly peak touched on Monday and currently trades around the 29.35 area, up over 0.30% for the day. From a technical perspective, the breakdown through a short-term trading range was seen as a fresh trigger for bearish traders. Moreover, oscillators on the daily chart have just started gaining negative traction and suggest that the path of least resistance for the silver is to the downside. In the meantime, momentum beyond the weekly peak is likely to confront some hurdle near the 29.80 region. This is closely followed by the $30 psychological mark, above which a bout of a short covering move could lift back towards the 30.35, 30.40 trading range support breakpoint, now turned resistance. On the flip side, weakness below the $29 mark might continue to find decent support near the 28.60 region. Now we'll show you more clips, but first, subscribe, turn on notifications, and make sure you share this video with a silver bug, as more people need to know. Enjoy the episode.
To hold any EU bonds, and the same thing is true about taking the $5 billion held in the United States. Why the hell would anyone want to hold treasuries from a country that is hypocritical, that is broke, insolvent, and is going around the world imposing these sanctions, and in fact outright theft? It's theft. It's default, and using the proceeds, even worse than all of that, to buy munitions that we make here, the military industrial complex, and giving them to the country that they're fighting in a war. I mean, it's as grotesque and egregious as can be. It's as stupid can be. It's almost too stupid to be stupid. But the point of it is that, yeah, that's real. Now, when we talk about the meeting in Novigrad, this is something that, Jesse, it blows my mind at the lack of journalistic integrity in the West. They don't talk about any of this stuff, and you cannot get the hell out of the way of what you don't see coming. And that's everyone that you care about, whom you probably have a similar fate that I do. You try to help people who are maybe even very well read traditionally, just reading the wrong stuff and have no idea what you're talking about when you say these things and look at you cross-eyed. Well, the same thing is true here about this massive development, right? Massive development. So please indulge me. I'll try to do this as brief as possible, but as usual, I'm not very brief because I like to set the stage so that people can understand. All right. There was a meeting. Now, at the beginning of the year, we were told by the BRICS that there would be 200 meetings leading up to the big meeting in October, right? And every one of those meetings, BRICS specific, with things that are, this is a big process. And for people who think that this is just a shotgun deal with the BRICS, it's been going on for 17, 18 years. And now it is accelerating. It's like a roll of toilet paper. When it's new and fresh, you don't see it spinning. When it gets close to the cardboard, it starts to spin much faster. And you see that cardboard. That's a metaphor for a lot of things in life, including life itself, but also in terms of the BRICS union that is growing. Now, let's go back a few weeks before the meeting, and in June, a lot was made of Saudi Arabia not signing the exclusivity deal, not re-upping it, right? And saying, well, we're not saying we're not going to take dollars, but we're also going to take other currencies as well. Well, that was big news. And all of the things that I've talked about with you on your show before all of this happened, that all the OPEC countries on the Belt Road, Saudi Arabia joining the BRICS, Saudi Arabia joining the Shanghai Cooperation Organization. You mentioned, by the way, the president of Belarus. He also called another thing I've been saying for 3 years. He has called for a summit to introduce the SCO, the Shanghai Cooperation Organization, and I highlight the word cooperation instead of coercion, and the Eurasian Economic Union, who what's his name? Sergei Glaziev is the economic finance minister for the Eurasian Economic Union, and he is the one who has a big role in what I'm about to talk about. He has called for a meeting of these two unions to join the BRICS.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comment section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.